Hello traders, this is Anirudh here. So today, 8th of March 2025, and I would like to discuss you with our smart money option tracking course, which is completely available in the English language. So, this particular program have a option to work with the 1 year with me, uh, work work with me or get mentoring from me. That means keep you will get the weekly updates on the market conditions based on the different way of learning the data. One of the data in between this is our oscillator, what we do use for the writing options. So this is a fantastic oscillator. We keep on using it for over a year right now, more than a year actually. But if you see, this is the non-repainted oscillator over this particular line. That when the market will came down below the zero, this for oscillator is the uh, indication. It give indication to you that when the market will get down or when the market will go up, but not for the one-sided trade, but it is for the directional writing trading. That means when you see the options, the data is coming below the zero. That means you need to write the calls. Similarly, when it goes above the zero, you need to write the puts. Take an example of the similar. Uh, just 1 second. So let's understand how this theory work for us. Like here, when we see the 6th of March 2025, from the opening itself, the market was hovering around the zero oscillator over here. Okay. This is the time. So at that particular moment, you can start writing the puts. So which put I would like to trade? I'd like to trade the 22,300 put, which is the at the money. So let's come here, and this is the 6th of March. That means the previous Thursday. So if I write the 6th of March put over here, what should be my strategy? So I came on here and go to the builder, and here, so go to the option chain and go to the this left hand side. This is the call side, right hand side, this is the put side. The 22,300 put I need to write. So this is the sell one, and I would like to add the position on the selling side. Similarly, I need to do a hedge. So what hedge I need to do? I can do a very simple hedge like here, 22,300. So I can write the 22,000 put as a hedge. 22,000 put at the hedge. So this is the 22,000 put, and I'm going to buy this. So now I have to change the numbers over here right now, because that is what I need to do the same. So I need to open that 22,000. What is the sell? I preferred 22,300. So go to here and option 22,300 put option. There is a 22,300 put option, and here you can see the shift March. In the morning itself, I need to sell. So almost a price of around 215. So this one, that time I need to 215. That means I'm roughly putting that time call and put. Put price, and 22,000 put. I need to put the buy. So 22,000 put price on the 6th of March. Almost at 50, 58, 60 rupees. I need to plot here. Oh, sorry. This one is the 27th of March. Sorry, I plot the wrong 13 March. I need to plot 215. Okay. And this one also 13th of March. at the price of 60. Okay. So see, right now, that time, the estimated margin of the premium was 55,000. So it would vary sometimes, and the probability of profit, what right now is the 85%. So far, we are making the profit of 16%. And this trade I keep on doing every week. Each and every week, I plot this strategy, and out of 8 week, I made almost a profit of around 6 week, and 2 week there are some cluster form, and in the 2 more week I need to do a little bit of the adjustment. So adjustment part is very easy. You can already know how to do the adjustment. So now, right now, what you can see over here. So this one here, this is the payoff 22,100 below. When the market start declining, you will make some losses, but your loss size will not be more than 1.5, 1.2%. But when you make the profit, right now, here, this is the profit. So this is the 16% of the profit, which you can see at the T plus 0 day, because we plotted the payoff right now. So if you see that if the market is going to move further, like market is going to move further, how much profit you will earn? You will earn the more than that. Right now it is 16%. So on the day, next, like if I see next one day, I would like to make some profit of around 11,600. Similarly, in that way, on the next expiry day, I will make some. This is actually the maximum profit. I did not notice that. So the maximum profit is the 20%, which is the 11,000. So in that way, I can always trade based on the oscillator. And now there are different procedure to do the daily based trading, the weekly based trading, the monthly based trading, by reading the max pain data, by reading the other datas also. So the here is the every detail. You can see there is the max pain, there is the zero oscillator, which just give you the example. Then NSE data reading for the potential tops and bottoms of the stocks, implied volatility, the RV and the IV, the option Greeks, especially the gamma strategy. This gamma strategy will be very helpful for the option buyers in the intraday. In the asymmetrical hedge strategy, like in which you can make some good amount of the profit. And definitely asymmetrical hedge is a professional strategy where you would take benefit of the future. And there are other strategies like the range forward, the option build up data, the payoff charts, which is one kind of the payoff chart is one kind of a good friend of you when you are trading the options. And India VIX and different of the income generation strategies. Income generation strategies I would guide for the one complete year, and rest of the things, these all things are for the learning purpose to understand the different stocks, different um, indexes for a very particular way. And I would definitely send some weekly examples for the next week possibility by reading the options data via the mail. So that's it for today. As of now, anytime if you're willing to join, you can always join. So bye for now.